Maybe you're at home. There's a knock on your door. Maybe you're at your business and a stranger walks in. In both cases, you could be dealing with an IRS Revenue Officer. Hi, I'm Anthony Parent, and in this video, I'll let you know how you can tell if you're actually dealing with an IRS Revenue Officer, and also, I'll tell you some of the surprising things about what they can do and what they can't. First thing, a revenue officer is not a revenue agent. There is a distinction between an IRS Revenue Officer and an IRS Revenue Agent. A revenue officer is employed by an IRS field collection office. Their job is to collect money. A revenue agent, on the other hand, is someone who's employed by the IRS to audit or examine you. Number two, a revenue officer does not carry a gun. I think I'd carry a gun. People can be kind of crazy. Now, third, a revenue officer's badge is a plastic card usually attached to a lanyard. If someone flashes a gold badge and says they're from the IRS, that's not a revenue officer. That's an agent from the IRS Criminal Investigation Division, otherwise known as CID. My advice would to be remain silent, to contact your lawyer. Oh yeah, IRS Criminal Investigation Special Agents do carry a gun. Fourth, a revenue officer cannot arrest you. If someone brags about how they stopped a revenue officer from arresting you, you don't have to listen to too much more of whatever that person is saying. A revenue officer has no arresting ability. The only thing a revenue officer can do is refer you to criminal investigations. Yet CID only accepts a fraction of those cases referred. Fifth, a revenue officer does not need a financial background for the job. All that is required for a revenue officer position is a 4-year degree. A revenue officer can have a Bachelor of Fine Arts and be qualified for the job. This is why revenue officers engage in months of training on an ongoing basis. The IRS has a lot of money and time invested in their best revenue officers. 6, a revenue officer isn't graded on how much money they collect. A revenue officer does not get promoted for bringing in the most money. Rather, it's how many cases they successfully remove from their inventory of collection matters. A revenue officer would rather you enter into a collection alternative like an offer in compromise to pay far less than for you to sandbag them for years. 7th, a revenue officer's powers are kind of limited. The IRS's use of seizures of homes and personal assets is way down. The reason is that the Revenue and Reform Act of 1998 made it very difficult to do so. So what can a revenue officer do? Levy any accounts receivable, lien property, levy retirement funds, levy wages and bank accounts, subpoena documents. Yet if a taxpayer is dedicated to running up new liabilities and trying to hide their personal and business affairs, this delays and frustrates the IRS. Now, you could get the IRS to close out your case as uncollectible, or your obfuscation could earn a lot of federal attention. If someone at the IRS really wants to make an example out of you, they can. 8th, a revenue officer must attempt initial contact in person. Everyone thinks the revenue officer is a total jerk for showing up unannounced at a family gathering, a Rotary Club meeting, or a restaurant to make first contact with you. This is not because they are jerks, although some of them can be jerky, but rather the Internal Revenue Manual requires that they make first contact with the taxpayer in person. You may not have been home the first time they showed up, so if you're wondering why someone from the IRS left a business card for you at your home or on your car, don't ignore it. They will attempt to contact you in person. 9th, many revenue officers are friendly and reasonable. So too have taxpayers, and that's a problem. See, a great deal of interactions between revenue officers and taxpayers are businesslike and professional, but this can be a really bad thing. As stated above, a revenue officer just wants to close this case out, and many taxpayers just want to get this matter behind them as quick as they can. So both parties, anxious to close out the matter, agree to some sort of collection alternative. The only problem is, in their haste to reach an agreement, neither one is really looking to see if the agreement is reasonable. Optimism and a lack of information about the alternatives cause taxpayers to enter into repayment agreements that just aren't realistic. Also, sometimes revenue officers, God bless them, don't code things correctly, leading to problems. 10, there's not enough revenue officers. And that could really be a bad thing. The IRS is about half the effective strength they were 10 years ago. And you might think this is a good thing. And you know what? It can be a good thing. We've gotten deals we would not have gotten 10 years ago. But this is the problem. Cases are stacking up, awaiting to be assigned to revenue officers. The problem is that you are likely going to only add to your problem if no one's assigned. And by laying low, you're not able to take advantage of the great deals. Yet the IRS isn't going to go away. And they tend to pop up right at the worst time. So taking the initiative when the IRS is overwhelmed could be your best strategy. So do you have an IRS Revenue Officer story? Are you an IRS Revenue Officer? Do you have anything you'd like to add to this list? If so, leave them in the comments below. At IRS Medic, we advocate for our clients on a one-on-one basis, and we also work in Washington to change the laws so that we don't have to advocate for our clients so hard. Right now, we are supporting the efforts to restrict the IRS's jurisdiction. We suggest you subscribe to our channel and to stay on top of the latest updates and learn how you can help us rein in the most complicated and far-reaching tax regime in the history of history. This is Anthony Parent of Parent & Parent LLP, IRS Medic, and I thank you for watching.